Right. Arlyne, are you here? Hi, Daniel. Hi, Chiromo. Hi, Bobby. Thanks for joining us, guys.
Hello.
Thank you. Thank you. We've got Tina. Hi. I think we've got Daniela with the numbers, and we've also got Dando. Thank you very much for joining. Hi, guys.
Thank you.
Hi, Daniela, aka 865741.
Hello.
Nice to see you again. Muka's got his video on. Love this.
I know.
Right. Let me just try to unmute Arlyne. And I'm hoping this is gonna work. Arlyne.
Work. I am. Hello.
Yes. Yes. We got there in the end.
Yes. However, could you enable me to share, please?
Of course, of course. If I know how to do it. I will do. Hold off on the sharing though, but I think it's allowed you.
Okay,
Just
brilliant.
give a couple of minutes for other people who are joining. I'll
Okay.
allow them before you start. Great stuff, great stuff. Thank you guys for joining. If there's anyone I've missed out who I haven't said hi to, my apologies. Thank you for joining. Daniel O, thank you for joining. Hi. We've got Gugu who's just joined. Hi, Gugu. We also have Harold who's just joined. Thank you guys. Thank you so much. Sanatskwa, or it's actually Tendai. Taka, thanks for joining. Pauline, thank you for joining. Welcome to the group. Awesome, guys. Awesome. I think we should just make a start, and anyone else who will be joining as we go along, I'm just going to keep adding them on and adding them on. Right. Thank you all. Thank you. Thank you. Okay. Okay. Welcome, guys. Thank you so much for joining us. I'm just going to ask for everyone who's on the call to just mute themselves so we can just focus on the one person who's speaking at the time. If I could just introduce myself first, and then just have a quick brief talk about who we are, the Zim Property Investors, and then we're going to have the lovely Arlyne talk us through the finance side, a lot of information about finance that she's going to tell us about, which is quite exciting. So myself, my name is Muzzy. Full name is Muzzy Nyanduna. Shorten it to Muzzy, just so it's easy for people to say. And we are the Zimbabwe Property Investors. Now, just for those who have never, ever heard of us, we just sort of like recently started. It's just a group of Zimbabweans who are interested in property. We get together once every week. We discuss anything and everything property. The whole point of it is for us to have a community of people that can share information, share resources, help each other in terms of our journey in property. We've got people that are starting out from scratch, people that are just curious. We've got people that are seasoned investors who are very experienced. And it's just a nice community of individuals who happen to be from Zimbabwe, but not exclusively Zimbabwean. Just get together and have a chat, and this is essentially what we do. And we've just recently started asking certain individuals to come and talk to us about certain aspects that will help us in our journey. Therefore, our very first official speaker for our community talks is Arlyne. So for all the guys that are on the call today, this is history in the making. It's our very first speaker who's going to be talking today. No pressure, Arlyne. My apologies.
I was already nervous, but well, thank you for that.
You'll be fine. You'll be fine. I've seen you talk several times. You'll be fine.
Well, thank you for the introduction,
No
Muzzy.
problem. No problem. So if I could just ask, obviously everyone to stay on mute, and for anyone who's got any questions as we go along, and I know Arlyne is going to make it interactive, feel free to use the chat box. And for any of your questions, if you want to raise your hands, feel free to do that. We'll be taking on questions, and I'll probably ask them for you, or just unmute you and let you ask your questions specifically. But I will just hand it over to Arlyne now. Thank you, Arlyne.
Thank you very much. Nice to virtually meet you all, and thank you for that introduction, Muzzy. So I'm going to start sharing because I like to be visual, and I've prepared a little presentation for you all. Okay, so today we're going to be focusing on credit score, how to build a credit score. I'm just going to introduce myself though, just so you guys know a little bit about myself and a bit about my past. So I am a chartered accountant. I studied CIMA a few years ago. It was a long journey, but we made it. I'm currently working as a finance manager at GIFGAF, looking after the statutory accounts for GIFGAF and various other projects like CapEx projects. So it's dealing with making sure that the company has a return on their investments. I'm also a property owner, so this is a fun, platform that we've got here. I'm really interested in what everybody's working on. I'm also a financial literacy advocate and a money coach. This is all a recent thing. Because of lockdown, I started to look at how can I help other people? And there's quite a lot going on right now. We're currently in a recession, so we all need to kind of think about our finances and how we're managing them. And since you're all on this platform investing in property, that must mean that you are constantly interested in managing your money very well and looking at various ways of kind of utilizing the money that you do have and growing it is what I'm assuming. So today we are going to discuss credit score because in previous conversations that we've had with various people, one of the biggest questions what is a credit score? How is it calculated? How can I improve my credit score? And what does it mean essentially when I've got a good credit score or a bad one? So this is just going to be a little bit of an introduction into that topic. And yeah, as Muzzy mentioned before, if you've got any questions, it would be great if you just put them in the chat box and then we can do questions at the end or during. We will be interacting with each other, but save your questions so we can discuss it all, because I'm sure someone else will be thinking of the same question. Okay, so what is a credit score? It's an estimate of the ability of a person or an organization, because some of you guys might be, investing in property under a business. So it's important that you've got a good credit score. So it's an estimate of the ability of a person or an organization to fulfill their financial commitments based on previous dealings. And it shows how well you've managed your borrowings based on your credit report over the past 6 years, which is really important that we understand that this is over, the past 6 years, a lot has happened, and that could impact the rate that you've got on your report right now. So I'm going to kind of give a brief overview over how it works and then get into the detail of how to improve it. So how does it work? There are credit reference agencies. I'm sure you guys would have seen adverts on TV for Experian, and we've also got Equifax and TransUnion in the UK. What they do is they collect your information to assess essentially how risky you are. Are you able to pay back the money that you borrow? And they use various methods. So they gather information on the credit that you've got, the type of credit that you've got, how well you've paid it off, and the utilization as well. So what are they looking out for, these credit reference agencies? First thing to discuss is if you've got any new credit accounts. So if you don't have any credit accounts, then this means that you don't have a credit history, so they can't assess you. So it's important to have credit accounts, but it's important to manage them as well. So opening multiple credit accounts in a 3-month period or 6-month period, that negatively affects your credit score. So they will be collating all this information and keeping it on your record. They are also looking at your credit usage. So credit usage is essentially how much of the credit that you've been given that you are using, in a nutshell. And we're going to have a quick little exercise already. So your credit usage, you've got person A and person B. Person A has a £500 credit card and has used £400 of that credit card, which is 80%. Person B has a £1,000 credit card and has used £200 of that credit, which is 20%. Which one looks better in the eyes of the Experian, for example? I'm going to ask you guys to start using the chat box if you don't mind. Is it person A or person B that looks better? So the person that has less credit, so they've only got a credit card for £500, or the person that's utilized just 20%?
B. Oh.
Love it. Okay, cool. So we got a few answers in. We've got A, B, B, A, but the majority of people have gone for option B, it looks like. So the reason why B has the best kind of outlook in terms of their credit is actually because of their credit utilization. So they've only used 20% of their credit. They were allowed to have more credit than person A, and they look like they can manage their credit well. So person A has been given £500 worth of credit, but they are using quite a lot of it. So it looks like you're living on your credit card. It looks like you are living on debt and you can't manage your money well. So we'll get into the do's and don'ts later on, but this was just a little bit of an exercise to see how you guys think. So this is an important one. And the next thing that they look out for is your payment history, which is really important. I think your credit score amounts for about 35% of because of your payment history. So if you have missed out any payments, it shows on your report. If it looks like you're always late on a certain payment, it could be for your telephone. You're always paying your telephone bill 2 days later than when it's due. This starts to amount to a bad score on your record. So it's important to understand when you need to be paying your bills for credit, the debt, and pay on time or early. I don't like living on the edge, so I like to pay for things early. Another thing is the length of your credit history. This one was a massive revelation for me, and I realized it maybe 3 years ago, and I'd been studying finance for all my life, to be honest, but it's important to actually have a credit history. So when, I don't know about you guys, but when I was growing up, I kept on being told that having a credit card would actually be a bad thing. And I think that was because if you have a credit card and you use it and you're using too much of it and you can't pay it back, then you get into debt that you can't manage. But if you have a credit card and you're paying it off on time, then this looks like you've got a good history of paying back your debt. But if you don't have a credit card at all, then there's nothing to look at. So the longer you've had a credit, it could even be loan. I keep talking about a credit card, but it could even be a loan, or I don't know, if you leased a car, for example. If all of this, it all depends on the length of your credit history. So it's actually important to have credit. That's the biggest thing that I can say about the subject, because I grew up thinking that I shouldn't get a credit card because this will look bad on my credit report. But it's like, for you to have a good credit report, you need to have credit, which means that you can then take advantage of all the positive things that you can have because of a good credit score. So the reasons why the credit reference agencies are looking into you is because essentially, let's say a bank, you've asked for a loan from a bank for investing in your property. Maybe you don't even need it for buying the property, but you need a little bit for furnishing the property. It might not be much, but if you've never had, if you've never had any interaction with that, bank, for example, the only way they can know that you can pay off your bills is by checking your credit score, whether you're an organization or an individual. So it's really important because they use it to assess your risk. And the type of things that they're looking at are whether to even lend to you in the first place, how much to lend to you. So this is pretty important. The better you look, the more they might offer you, and how much interest to charge you. So essentially, if you've got a bad credit score, they'll be giving you bad deals where they're charging you quite a lot of interest. Therefore, you have to pay back quite a lot more than you borrowed. So it's important that your score is pretty clean. So how do you find out about your score? How can you even check? So there are various platforms that you can. I mentioned Experian before, so there's Credit Karma. I prefer Experian, and then there's Equifax and ClearScore. Got a really, really good app. It's really clear, really simple. Anyone can use it. So I actually use ClearScore more often than Experian. And Check My File as well, because Check My File actually collects quite a lot of the information that's then filtered to other organizations. So that's a good one to have a look at. Just use any one of these, see which one works best. But essentially, they might all have a different score in terms of the number because the ratings are different. I think Experian is up, it's like from 1 to 1,000, whereas ClearScore is up to 700. They're different numbers, but they are telling banks, for example, the same thing, whether you've got a good score or not. Is it fair, or you need to work on it a little bit? So these are the ones that I'd recommend, especially if you're starting out. So we're going to go back to the interactive time. So understanding your credit rating score. So I've got a question. Your credit score affects the interest rate you're offered when you apply for mortgage. Is this true or is it false? I'm going to check the chat again. Feel free to interact. Brilliant, we're getting some answers in. I've already seen a question. I might answer that whilst we get the answers coming in. Why aren't the ratings standardized across the platforms? That's a good question, because that will make my life easier as well, just to understand which number I'm working towards. And I think it's just because there are different organizations started at different times and in different countries. I believe one of them is American and another one is from the UK. But don't get bogged down on the actual number. The point is whether you've got a good rating, and they always say that in there, that your score is good, excellent, fair, or poor. So what's important is where you are at, not the actual number. Okay, so we've got our answers in, and the answer is, yeah, it is true. So your credit score, this is the biggest thing, and I'm guessing the biggest thing for these group of people, that if you've got a bad score, then this will affect the interest rate that you're offered. And you know, a mortgage is a high ticket item, and you don't want to be paying back more than you need to over the next few years. Another question, is getting a credit card bad for your credit score? Yes or no? Got a couple of answers. Oh, Muzi coming through with that. It depends. Cool. And Salinda as well. It depends. Cool. Great. Thank you for all your answers. And the answer is no, it's not bad for your credit score. And again, it does depend. So as I mentioned before, for you to build a credit record, you need to have borrowed money for some reason. It could be that it's not a credit card. Maybe you're just getting a car, or you're just getting a loan to do up your house, or any other form of credit that you've applied for. But you need to be able to demonstrate that you can pay back money. And this goes back to the utilization exercise that we just had. If you've got a credit card, just use just a little bit of the credit and pay off over time. But it's not bad to have a credit card, which is good. Just make sure you manage your money very well. Oh, I just saw a question right now come through. Will checking your score also affect, will checking your score affect your score in some way? No. Get yourself a report, download the app, make sure that you check it, especially if there's some sort of fraud, someone got your details somewhere and they're using your name, and they're using a credit card under your name. If you've got the report, this is the best and easiest way for you to know this, because you would recognize that that's not my card, and then you can report it. So no, it's not a bad thing. Check it every month. Having a bad credit score will affect whether you are approved for a car loan. Is this true or is this false? Yeah, I've got a theme, and yes, it will affect your car loan. They can just refuse you because they will see that you can't pay back any debt. So they might just refuse to give you a loan. Okay. Does having a student loan affect your credit score? I've been asked this so many times, so I'm interested in finding out what you guys think. You better not, right? Okay, cool. I think you guys have done your research. No, it doesn't. And this is because you're essentially not in charge of paying back your student loan. It comes out straight from your income from your employer. They just get it straight out there. So it shouldn't affect your credit score. However, what it does affect is when you're applying for a mortgage, for example, they do ask if you have a student loan, because that's a fixed amount that is going to be deducted from your income. So it's important for that aspect, but it doesn't affect your credit score. So that's a good thing. Okay, last one. Will a pay rise affect your credit score? Cool. Most people have said no, it shouldn't affect your credit score. Yeah, not directly. Good answer. And this is because your credit score is your ability to pay back debt. So whether you're getting paid more money or less money, how you manage that money, that is not reflected. So if you get a pay rise and then you start paying back more against your credit, then that's good. That's affecting your score positively. But if you just had a pay rise, but you're not paying back more, then this isn't affecting your credit score at all. Cool. Before I get into it, I think I saw a question. I know we're going to do quite a lot later on, but I might as well answer it. What about disagreement with utility companies? So by that, I'm assuming that maybe you haven't paid back, or you haven't paid your utility bill on time, and then they can kind of report you, and it could be a default payment. This is a negative thing against your score. I think it might depend. I'm not sure what kind of disagreement that you would have with the utility company, whether you're disputing the amount that they are charging you, or I'm not sure, or you pay them on time and they don't think that you pay them on time. Maybe if you just elaborate on that question, and then we can discuss it later on. Okay, so advantages of a good rating in property. You get better interest rates and deals on credit cards, loans, credit agreements, and mortgages. And this is important because I'm assuming you guys are in this business to get a good return on investment. You need a good ROI, otherwise why invest in property? Or maybe you're buying your first property, and it's still a good thing to have good interest rates, because then it costs you less. So it's important to have a think about this way in advance of buying a property or looking to buy a property. It can be easier and faster when applying for a mortgage, because if they see that, you know, you've got 999 points on Experian, then you know that you're risk-free, which is brilliant, and you've got all your cash, then brilliant. I mean, you've got your deposit and everything else, then this is great. So it's important to have a look at your score. Some of you guys might be looking at getting some angel investors, and if you're kind of new, the only way that they can check is what's your credit score, so they can assess whether it's a risk to invest with you or not. So another big point, you will have more negotiating power with suppliers. For example, if you've got a good score, then maybe you might get really good deals, or even when you're negotiating with other lenders. So it's an important point. And you might get approved for higher limits, as I mentioned before, which is a good one for property as well. So we're going to get into the do's and the don'ts. What should you do to improve your credit score, and then what you should stop doing, because that is not improving your credit score. So your do's. You should review your report monthly. This is the first thing. This is like basics, and you should download it tonight. If you don't have a report handy, again, I had the various platforms that you can go on to go and review your report. So definitely do that, because you need to check things like your address. You need to check the credit that's on your report, just to double check that it's correct, and various other things. Just have a look, and maybe you might notice on there's a, I don't know, telephone bill that's still on there, and it's looking like there's a default and you forgot all about it. So this is a great way to just kind of check where you're at, because if you don't check, how will you know? This was a point I already made. Check for errors or fraud. It's really important, because it's real. Like, there's so many like reports at the moment coming out of people. Fraud has gone up, so let's stay on our finances. Also check for the credit utilization that I mentioned earlier. Ideally, you want to stay within not more than 30% of your credit that you've been given. So it's important to check this as well. On ClearScore, I found out that you can check the percentage there. It's really nifty. It tells you how much you owe and the total balance, like how much you've been awarded. Therefore, what's the percentage? It's nice and handy. You don't have to work it out yourself. And I'm not advertising for ClearScore, but it's pretty good. Also, please check the number of on-time payments that you're making to improve your score. So, just make the on-time payments to improve your score. This will make a massive difference. I remember the first time that I downloaded ClearScore, just to check like where am I at before I was trying to buy a property. And the things that I saw there, I was like, this is wrong, or I swear I've paid this on time, only to find out that actually the standing order that I had prepared, don't ask me why I hadn't had set up a direct debit, but the standing order that I had prepared, it was 2 days later than when the amount was due. So that's an easy one to fix. So make sure that you're making on-time payments, because that's key. The number of open accounts that you have. So a question that has been brought up in the past was, if I finished paying off a credit card, is it better to just throw it away, or should I cancel the account? So that means that, yeah, I'm on good grounds, I'm not using the credit. So, but this is actually bad, because we want to have a good payment history. So if you've got a credit card that you're paying on time, that's proof. So you don't want to cancel that account and get rid of that good history, essentially. So you can keep open accounts, not too idle. Maybe just use 10% of it. Buy something, I don't know, go to Tesco and then pay it back, the next month, because it just looks good on your score, rather than having no accounts at all, because that erases your history. And get on the electoral roll, because we all need to be voting anyway. So you should be registered. This is such a big deal for them, to make sure that you're on there, and check the address that you're on there as well, because it all needs to tally up. It just all needs to tally up. So it's important to review your report to check where you're registered for your electoral roll. Those are your do's. These are your don'ts. So don't use more than 30% of your credit limit. I know I keep saying this, but it's a big deal. I wasn't really looking at it as much until at least I got this app, and I started realizing where I'm at, how much I'm using. So you can plan the next month, how much you're going to pay off. Maybe if you want to use a bit more in a couple of months, pay off a lot now and then use it later on. So it's a helpful tool to manage your money. And I'm not sure why it's 30% either. I think if you just stay within I don't know, 15 to 30%, because it looks like you can use debt or you can use credit and pay off on time, but you don't depend on it to live, essentially. And moving house too often. Yeah, so if you're constantly moving house, then you just kind of look a little bit more riskier than other people. In terms of the too often part, I think it depends on the provider as well. I don't think this is the biggest of deals, but it is taken into account as well. So make sure that where you've registered to vote is the same address as where, you know, like your bank statements, where they're going. So it all ties in. It just looks like you're less risky, essentially. Don't have any missed payments, same point as your dues, but I just thought I'll harp on about it. So don't miss any payments. Avoid bankruptcy. I'm sure everybody on here is trying to invest so they don't get bankrupt. But yeah, once you do, it just looks like, yeah, you can't pay back any debt. You're a write-off. So just don't do that. Don't close accounts. Same point as before, as keep your accounts open. And this one, hard searches. So there's a difference between a hard search and a soft search. I'm going to assume most people don't know the difference, so I'll just explain. So a hard search will be when you're applying for credit or long-term debt, I'll say. So for example, your mortgage, when you go and apply for it, not kind of an agreement in principle, but when you apply for it, that's a hard search. So if you get rejected for your mortgage, I don't know, what month are we in October, and then you want to try again in November, your credit score would have gone down. So it's important before you apply for credit that you've assessed everything, you're going to get approved, because if you don't get approved, then the next time that they have a look at your credit score, it's had a negative effect. A soft search is more when, I don't know, when you're applying for a phone, I think, or just, for example, when a bank wants to offer you more credit on your credit card, because they do that, they want you to spend more. But when they offer you more credit on your credit card, they have a little search in the background. That's a soft search. It shouldn't affect your credit score as much as a hard search. Any defaults or repossessions, we don't want to get to this stage because that looks bad again. So just avoid it. And another one where I don't think quite a lot of people knew, if you're withdrawing cash from your credit card, this looks like you cannot manage your own cash that you've got, like you can't manage your assets. Therefore, you need to kind of withdraw debt to be able to pay off, I don't know, you're shopping at Tesco, or pay off a supplier, for example, if we're talking in business. So avoid withdrawing cash. There are some credit cards where the deal is that you can withdraw cash and this doesn't affect you negatively. So that's a different story. But if you're just taking money out, and then this is bad because let's say that you have to pay back that money with interest, that's the worst possible move. So it's a good one in terms of managing your cash. Do not managing your money. Just don't withdraw cash from a credit card. Okay. I really whizzed through the last couple of slides, but I think those are the ones that are most relevant in terms of just improving your credit score. So I just thought I'd go back to it. These are the key points. If you've got any questions on them, I will open it up. And also, here are my details. So thank you for listening. It was really short and sweet, but I know you guys want to get on with your Sunday dinner. I am offering a freebie please follow me on Roots to Fruits, which is my new platform that I created for discussing all these topics. It's not just about credit, but other points on improving your finances and financial management. I am a chartered accountant as well, so I can work with small businesses. So yeah, I've got a freebie where I can give you like a checklist to help build a good credit score. And also I can offer a 15-minute consultation session on a one-on-one. And please give myself or Muzi some feedback on how this session went, the good and the bad as well, because it will help me with my future sessions that I'll have. But yeah, that is,
Brilliant, absolutely brilliant. Thank you, Arlyne. And
Right.
with a bit about the feedback on the good and the bad. Give me the good, get in touch with Arlyne on the bad. Don't tell me anything about it. Thank you very much, Arlyne. Much appreciated. And guys, if you've got any questions, please feel free to just drop them on the chat. So Arlyne, I'll start off with my question. Whilst we go through the questions that are still left that the guys may want to ask. So you talked about credit rating and the importance of it, and I think a lot of us understand it, we just don't understand how it works. Does my credit score affect my ability to borrow as a company?
So it depends on how you've registered your company. So if you are a limited company, if that's how you registered it on Company House, then it can do, especially if you're starting out, because you don't have a history perhaps. So it's important that you make sure that your rate is up to scratch, and also the company's one. In terms of the company, to make sure that you're paying off your suppliers on time, any loans that you have under the business name, that you're paying that off as well. Because I believe if it's two separate entities, your own score and the company's score, but there are ways that it's intertwined because you're a limited company.
Mm-hmm. Awesome. So they are slightly interlinked, so it's important to make sure I sort mine out and not hide behind the companies.
Yes.
Okay. So I'm just going to go through the chat. Some of the questions you've already answered. Thank you very much. I think the first one that I can see on there is Emmanuel's. Emmanuel, he's asking if a fine affects your credit history.
A fine so maybe like a parking fine?
So Emmanuel, if you could just elaborate, please, sir.
Yeah, so what happened to me recently was that I used to live at an address 6 years ago, and it happened that someone registered their car, and they used my address, they used my name, only then to discover that they were using that car, which I'd never owned, for whatever activities. So I had a call from the bailiffs, because they were trying to find where I live. And I was like, well, I'm not even at that address. What's actually happening? And so I'm basically at the moment just trying to pursue it, how to involve the police. But then I'm thinking, if that fine doesn't get paid, would that then affect my credit history? Because the bailiffs are involved at this stage.
Yeah, I was about to say, now that we've got bailiffs involved, it's going a bit really, really serious. And whenever bailiffs are involved, it's going to affect your kind of financial riskiness. So yeah, there's two parts to it. Because it's from the council, this fine, right? It's from the government. And then there are other fines that you can get. I'm just thinking outside my apartment. There is a private company that has handed fines to people. Their fines do not affect your credit score. But the one that that you've described, I believe it does. So it's yeah, if you can try to get that sorted out anyway, just because, you know, that's a serious thing, to try and argue your point. And then also you can contact the credit rating agencies, so like Experian, and you can explain what's going on, because essentially it's fraud, isn't it? So if there there could be a way that you can put a note on your report to say that this particular line, it's on there because of fraud, and it's being investigated. So that's a way to maybe kind of go around it. But yeah, I think it needs to be sorted out ASAP.
Yeah. Because what the incident took place last year in December, and it was Dartford Tunnel. Last year, I wasn't in Dartford Tunnel. I've never owned that vehicle, and because the Dartford Tunnel agency, they couldn't track, so it went to the old address, and then somebody who stays at that address then contacted me saying there's a letter for you, and they forwarded it to me, and that's when I noticed it's actually accumulated. Yeah, so okay.
Yeah,
all
unfortunately, right. Yeah, those are the types of frauds, yeah, that will come up. That, yeah.
Okay.
Awesome. Thank you very much for the question, Emmanuel, and thanks for the response, Arlyne. We've just had another comment in the chat that yes, you can get in touch with credit rating agencies to be able to resolve this. So hopefully you get that sorted, brother. We've got another question from Mugo, I believe. Mugo, you there?
Yeah, I'm here. So the question, Arlyne, was how long does like an adverse credit stay on your file? So like a CCJ or bankruptcy or default?
That is for, bankruptcy is an interesting question, but things like a default or missed payments, they stay on there for 6 years. So as long as your report, it rolls forward for about 6 years. But things like if you've had a search on there, you can then get a search again in about 3 months. Or let's say that you've been missing some payments in about 6 months. If you have been meeting your payments, then it starts to affect your score positively. But bankruptcy, that's an interesting question. I'm not sure how long you'll stay there, but as long as you've got the report, it'll still be on there. So I'm going to go for 6 years.
Arlyne, could you just explain that first part again? So you said it stays on for 6 years, but if there are payments, then what?
So it depends on what it is that's gone wrong. So if this is bankruptcy, then I'm not sure, but off the top of my head, I'm saying it will be on your report for as long as you have the report. So for 6 years. But if it's things like late payments, they will still be on your report for the next 6 years, but they'll start to, your score will start to improve. If you're making on-time payments and you're improving, you know, your credit utilization and fixing everything else, then your score will start to improve over time. But yeah, it kind of depends on what it is that's affected your score.
Got it, thank you.
Awesome. I think that touched on another point. We've got a question. Actually, I will ask Salome to unmute herself, please. Just raise your hand.
Oh, yeah. Hi, Mozi. Can you hear me?
Yes, I can indeed, Salome. How are you?
I'm good. I just wanted to tell people that I've got experience with CCJs. It will stay on your credit score for 6 years, whether you're paying or not. You're paying because mine was agreed, but it stayed for 6 years. And after 6 years, that's when I managed to start to get some, you get credit cards, those which are not bank based. The credit cards like online credit cards, which you use to try and prove that you are back to the normal, the right way. But it will stay for 6 years on your credit. I just wanted to help someone there. It will stay. So if you agree into it, it will stay. But if it is the other one, where you say I don't have money at all, what do you call it?
Or
Where you declare that you are bankrupt.
bankrupt, yeah.
That will follow you forever. Bankruptcy will follow you, and you really need to consider to think hard, because I nearly went to it, but being advised by financial companies, by people in banks, it really carries a lot of more implications that will be difficult to come out of than CCJ. That was my contribution, guys. Thank you.
Thank you, Salome.
Thank you.
Much appreciated. Hopefully that actually helped someone there. Thanks for sharing that information. We've also got another question from, well, it says Tanaska, but I know it's Tendai. Are you there, Tendai? Tendai, if you unmute yourself.
Hello.
There he is.
Hello.
You're a bit far away.
Okay, can you hear me?
Yes.
All right. Yeah, I was just thinking, if you want to liquidize your credit card cash, instead of getting cash from the cash machine, I know they will charge you more. So is there a way of liquidizing it, getting money out of it without incurring the charges and stuff?
I definitely advise not to, unless don't do it, unless if you've got, like you can get those deals where you can get some cash back from your credit card, but that's a particular deal and you can use that cash. But if you don't have that as a deal with the credit card company, then it looks bad on your record, because it looks as though you can't manage your money well, because you're using debt to pay off this, that, and the other. However, you can just, because most companies now, especially because of COVID in 2020, they accept credit cards. Well, not all of them, but most do. So if there's a way of paying something off using your credit card rather than getting cash out of the ATM, that's the best thing.
Okay, thank you.
You're a mute, Muzzy.
Oh, I'm busy talking to myself. Okay. Thank you for that. Thanks for the question. The next question is from Kuzai. Does my partner's credit score affect mine if we have a joint account?
Yes. I found this out at some stage and I was just like, what? Because you've been building your credit score all your life and then someone else comes around and they've got a bad one. But it only affects it if you're doing things jointly. So maybe if you're buying a house together, then it's kind of like they have to look at both your credit scores, and if your partner's credit scores is bad, then it will affect it. Any other deals, as soon as you get a joint account, then you're tied. So
sorry, you're saying if we've got a joint account, sorry, thanks for the presentation as well, that was quite good. A lot of information.
Thank you.
I was gonna say, so if we've got a joint account, does that mean that if I want to get something by myself, that I'm also linked to that person with that joint account? Or is it just if we're getting a house together?
Well, I might answer that differently. Let's say that, yep, you've got a joint account, joint account, then and maybe you want to go and buy a car or finance. So they're going to be checking your credit score, and when they check your credit score, it could be affected by your partner. Especially if let's say your bank accounts are linked and they're joint, then yeah, that will be affected.
Okay. And then to add on to what Tendai was talking about, liquidating his credit, does a balance transfer count as that liquidation of credit or?
Yes. So a balance transfer is like one of those deals that I was mentioning in a good way. So you can transfer an amount from one credit account into the credit account where you've had a balance transfer, and hopefully you've got 0% interest on that account. You should only do it really if there's less interest that you're being charged. So that's a way. But then at that stage, that some companies offer you a deal that you can then take cash out, some don't. So it's important to read the T's and C's of that agreement.
I could see Muzi smiling over there. Have you used it or something, brother? I could just see you giggling from.
No, I'm smiling because after your question, I've just had a message from my wife that I'm off her joint account. Thanks for that.
I didn't mean to cause any problems out there, people.
You already have.
Nah, thanks, guys. Thanks.
I appreciate it, because thank you. Can I just ask Tina to unmute? I know you've got a question.
Hello, thank you very much. Can you hear me?
Yes, we can.
Yeah.
Thank you. Maybe part of my question is answered already. I've got my credit utilization is like 80%, and I've got one default. It's 11 months now.
Mm-hmm.
So my credit rating is really bad. But my husband's credit rating is very good, and we wanted to get a mortgage. So is it best for me to wait until I sort out my credit rating?
Yeah, definitely wait until it's improved, and have a look at other things on your report, because that didn't sound too serious, the stuff that you mentioned, for you to have a bad score. So whatever platform that you're on, hopefully they tell you why, like they will have like a reason why this bit is negative and the rest that you're doing well. Is there anything else on there that you can improve just get to good, or at the top level of fair to good? Then
I think it's said it's a credit card that I could pay a little bit more rather than just paying the limit.
Okay.
The minimum limit, yeah.
Start doing.
I thought it was more to do with the 80% utilization that I have on there.
It's a tricky one, because so you've only used, was it under 10%, you said?
No, it's 80%.
80, yeah, that is a big one. Yeah. You need to pay that off. Yes.
Yeah.
I think anything about, sorry, I heard 8, so I was thinking, what's okay?
80.
No, get to 50 as soon as possible before you even start having other, having the mortgage provider have a look at your score. Get to 50% at least, and then if you can get to 30, that's ideal. But
okay,
yeah,
thank you.
Okay, thank you very much for your question, Tina. Really valid information there, and thanks, Arlyne. Credit builder with high interest. That's a point that has just been thrown in there by Emmanuel on the chat. Hopefully that helps someone. So there's a system in the USA where you can actually add other people to your credit card. Do you know if there's a similar thing that happens here?
By that you mean you've got a credit card under your name and someone else can use it under their name?
Tendai, if you'd like to elaborate on that, please.
Oh, I think you're
on. Can you unmute, please?
Hello.
Hello. Yes.
Yeah, there's a system in the United on your credit card, and they have your credit rating and everything. It's like renting your credit card, your credit rating.
Mm-hmm.
Do the payments themselves. So I was wondering if there's a similar system around here.
That's a very interesting question, and I will look into it. But I would advise not to. Well, it depends on who you're lending your credit card to, right? Is this all in an organization or is it to your family? Because it can affect your credit score if they badly manage how they're repaying it. But I've never heard of it before in the UK. But I can go away and then any questions that I don't know the answer to, we can follow up.
Yeah, okay. That's fine.
I think it's like a guarantor type of thing. Like you link yourself and the other person's kind of like your guarantor. But I don't think that's allowed in the UK.
There we go. Shiona spoken.
Thank you.
Sorry to jump in. Actually here, sorry, my name is Victor. Here in the UK, you can, if you're the main credit card agreement holder, you are able to apply for additional cards and put other people's names. But ultimately, you are responsible for paying it. But you can have as many.
No, all right.
And it will be in the name, the cards themselves will be in the names of the individuals. But however, you are responsible for doing that. What I'm not sure about is how does it affect the credit score for the rest of the people you put on there? But for yourself, if you are trusting to say, I can have, say, my daughter can have a credit card, my wife can have a credit card, my son can have a credit card. If they go out there and spend the money, they're doing it on your behalf.
Yeah, that's correct.
Yeah.
Their credit score is not actually affected. It's only the main card holders. So it will just be working on the limit of the main account holder. So if I have, let's say, a £5,000 card, I can add all my family members. They'll get their own cards, but only my credit is affected because it's just me allowing other people to use my money, essentially.
So Tanatwa, you can apply for a card in my name, please. Thank you.
No, I'm actually charging people to use my credit.
Thank you so much, Victor. Thank you, Charlene. And thanks for the question, Tendai. Much appreciated. Thanks for sharing that. Arlyne, we've got another question from Brian. How is a balance transfer detrimental to your credit rating when you're actually opting for an alternative CC company with a much more favorable interest rate and other lucrative T's and C's? Brian, you definitely need to come online to talk about this one.
Look, that's why I wrote it down because I'm not feeling well. Okay. So let me reiterate on that question. So the purpose of a balance transfer is for you to transfer your balance to another credit card company that is evidently, giving you much better terms and conditions, better interest rate, etc. So I'm failing to actually comprehend how that could be detrimental to your credit rating, because it's not that you have failed to pay, but you're just making a transition of your balance to another company that is able to offer you better conditions. So I'm really failing to understand how that could actually affect, or how that could have any adverse effects on your credit rating.
Yeah, I'm glad that you're clarifying, because it doesn't. So when we mentioned it's bad to get money cash out if you don't have any one of those deals. But in terms of a balance transfer, first thing is, let's say it's a different bank, I don't know, Barclays, that you'd like to apply for, but of which they have really good deals, Barclays. So you've applied for that balance transfer with Barclays and they've offered you maybe 0%. at that stage, there's a couple of things that happen. There was a search under your name, so that will go against your report. Really, like within a month, your score might just be affected just a little bit, just because you've had a search, just a little bit. And then in terms of it being negative, it's not because you're essentially managing your money. They are encouraging us to do that, to be able to switch between providers so you can pay off as quickly as possible. So I wouldn't say a balance transfer is bad. Actually, it's good because you're managing your money better. But at that stage, there might be a search which might have a little bit of an effect on your score, but nothing permanent and nothing bad. What I was saying was bad was you going to the ATM and just taking money out.
Oh yeah, no, that one is unnegatively something that would affect your credit rating. So I just wanted to make it clear that certainly a balance transfer wouldn't really affect, but whatever effect it has, it's certainly inconsequential, because it wouldn't really affect your credit rating to that to that point where it becomes quite conspicuous on your credit card report, on your credit rating report. So can we conclusively say that it doesn't affect your credit rating?
Not majorly, no, it doesn't. Okay. It shouldn't.
It shouldn't. Okay.
But if you're applying for multiple from loads of different places to try and apply for balance transfer, then it's starting to get a bit negative. But no, it shouldn't.
Okay. All right. Thank you. That's my question. Thank you.
Okay.
Awesome stuff. Awesome. Thanks a lot for that question, Brian. Hopefully that information helps someone as well. Now, I think we have touched on all the questions that were on the chat, and I don't see any other hands raised anymore. Arlyne, your presentation was amazing. I think you've managed to answer all the questions. Okay. Actually, there is one more hand that's just been raised now. Mugo.
Yeah, sorry, just one last question. Is there a limit to how many credit cards you can have?
You can have, I don't think so. It all depends, but you should have. I think it might be important. So the pros and cons of having multiple credit cards. A pro is that you could have access to good deals. So let's say one credit card provider, they've only offered you, I don't know, £1,000 at a really bad rate. You have that credit card, but then there's another one that you can apply for. So now you've got two, and that other credit card provider, they're offering you a really good deal, really low rates, maybe even 0%. So that's an advantage. And also it means that the amount of credit on your record that you have been allowed to have is more, meaning that if you don't use that much, your credit utilization is better. So there's advantages in having multiple credit cards, but then it's how well you manage those credit cards. I don't think there's a limit as to how many you can have under your name, but just make sure that you're managing them well, because I don't believe at some stage you're not getting all those good deals. But I don't know if anybody else on the chat knows a bit more about that, but I don't believe that there's a limit as to how many you can have.
Okay, cool. And what about having a very low utilization on your credit? I know you mentioned about, well, not zero, but you end up with a lot of credit cards and then your utilization goes really low, maybe 5%, 2%.
Yeah,
is there a negative side to that?
No, it's not negative. It's not negative if you have a low score, but essentially the point is you want to show that you can borrow money and pay it back. So if you're not using them at all, it's not counting towards it in a massively positive way. So in terms of just getting loads of credit cards just to better your score, I think it'll be good in terms of the utilization point, and that's one of the only pros that I'm thinking about here. And just making sure that you can manage them well in terms of paying them all off at the right time. If you can juggle multiple things at the same time, making sure that you're paying them off. I hope that answered your question.
Yeah, it does. Thank you very much.
Awesome. I've got another hand raised. I think your question might have prompted something else. Tina, would you like to unmute yourself?
Oh, yes, thank you. I wanted to ask on utilization. So this credit utilization, is it just for credit cards or does it include loans as well?
Yes, it does. Good question. And yes, it does. The Nifty tool on ClearScore, it kind of puts them all together. It also even includes like your telephone bill as well, because if you've bought a phone and you're paying it back on finance, then that's on there. Your short-term loans as well, or even your I think your car payments, that goes on in a different category because that's a long-term loan. But certainly credit cards or small loans, or even things like Klarna, that goes on your credit score because you that's finance, that's credit, that's debt. So that's all grouped together. So yeah.
All right, thank you.
Brilliant, brilliant. I don't see any other hands raised or any questions. Could I just ask if you've got a LinkedIn, Arlyne, if you can share your LinkedIn link, that would be great. Also, guys, speaking from my own experience, I've utilized the freebie 15-minute consultation with Arlyne. It's absolutely brilliant. At the minute, obviously, we're discussing the generic stuff and theoretical stuff that you're talking about. If you want to speak a little bit more detailed of something that's specific to yourself, utilize the 15-minute freebie whilst it's free, and contact her on the details below. That will be absolutely awesome. And for the guys that weren't there at the start of the presentation or at the start of the meeting, if you don't actually know who Zim Property Investors are, we've shared the link on the chat box. Please feel free just to go check us out. It's a Facebook link and you can get to see what we are about and what we do. And we're going to be holding these meetings once every month, and I'll be sharing the links to all the platforms that we've already shared to. So if however way you found us, we're going to find you again. And if you'd like to just join us on the Facebook group, you will see the updates as well anyway as we go along. Thank you very much for all the guys that have joined. And would love to see you again on the next speaker that we actually have, and we will be letting you know who that person would be. If anyone else has any other questions that you can think of, if they pop up later on after this meeting, contact Arlyne on the information below, or just find us on the Facebook group. Otherwise, thank you very much, guys. Cheers for joining, and have a great evening.
Thank you. Thanks for having me.
Thank you for being here.
Thank you.
Yeah. And for the LinkedIn, you can just search my name on LinkedIn.
Good night, everyone.
Arlyne
Thank you.
Thanks, Eileen.
No one.
Hi, Lucy.
Hey, Pelagia.
Thank you, Arlyne.
Thank you. Thank you.
Thank
Hi,
you. Bye.
Feli.
Hello.
Hi. Hi, everyone. Thank you so much. You're welcome. Wanga wakangano ende fuji.
Bye, Pelagia. I know you're not gonna go.
But nasa nutu wachanze kutauriza. Taiwan next week. Yeah.